So many thought 2017 was going to be a banner year for M&A, especially with the much anticipated business-friendly Trump administration moving in. So where are we and what can we expect for the rest of the year? Well, we have experts here from EY to discuss it. All right, we're going to go around the table quickly. Let's start with Bill. What do you think? How was the first half of the year?
The first half was pretty consistent with what it was last year. I think the biggest thing is we saw the number of deals that were $3 billion and higher was really half of what it was the prior year. So we see the number of deals being pretty consistent. It's just the deal value at the high end of the range dropping.
That's the thing. The volume's there, the money's not, right?
Right.
Well, in life sciences, actually, we've seen a banner year for transactions, and we've seen that over the last 3 years. If you look at the data, we're on pace for another $200 billion in deals in the life sciences space. If you look back coming out of the financial crisis, the life sciences space was averaging around 125 billion in deals. So we've seen a market uptick in deal activity, and we're on pace for that during this current year.
It seems to be like biotech, pharma, that's where it's at, right? Obamacare be damned.
Yeah.
It's happening.
And we're also seeing a good deal of private equity activity as well in spaces like the pharma outservicing space with contract research organizations and contract manufacturing organizations. That's a real hot area for private equity to be investing in as well.
Andres, though, consumer product, tech, retail, that's all still happening too, isn't it?
Absolutely. You get a very similar story. This year has been very good for consumer products and retail. Higher aggregate deal values than last year. PE specifically, it's been the most active sector. Over 20% of deals are in that consumer and retail product space. It remains an attractive sector for people. Stable growth platform. The consumer continues to fragment its spend in a way that creates different brands, different product categories, different channel opportunities. All that creates opportunity for new leaders, new platforms out there. So people are excited about this sector.
So, John, going forward, I mean, I think the administration affects your industry the most, right? Between repatriation, between tax policy. What do we expect going forward?
I think as you look at the life sciences space, it is disproportionately affected by a lot of the policy decisions. You also have healthcare reform, which we're going to see some activity on this week. You have headline risk with drug pricing that doesn't seem to want to go away. And so as those types of policies are enacted, there'll be both headwinds and tailwinds. I think on the repatriation front, that's a real tailwind that potentially could be there for M&A activity going forward. There's a large amount of cash that's overseas. As that cash potentially comes back to the U.S., and if there is some type of investment reform around tax policy, you could see a lot of that capital going to work in mergers and acquisitions.
Speaking of money going to work, Bill, we had talked earlier about infrastructure. You think that's a hot spot for the second half of the year?
I do. I think that's going to be the big story for the second half. There's, you look at Blackstone, they're raising $40 billion. We've got a government that's really committed to the space. It may be the first time that we really have those two things lined up. And so I think it'll be really interesting to see in the next 6 months how things play out on the infrastructure front.
Andres, in your industry, do you care about what's happening at the Trump administration?
You do, and it may be more subtle, but at the end of the day, you have this fundamental tension. On the one hand, the economic indicators look good, unemployment, the stock market, consumer confidence, but there is this nagging uncertainty that the consumer has around concerns about the economy, concerns about global regional conflicts, terrorism, et cetera. So the question is, does something happen in the next 6 months that tips the consumer to be much more conservative about their spending and how they think about? And then what does that do to the appetite for deals in the space?
That's the thing. John, we've been sitting on all this cash. I mean, what if nothing what if it's deja vu all over again? Nothing happens in the White House. Probably not going to get tax policy before the end of the year at this point, right? So does the cash pile keep piling?
The cash pile will keep piling, but we also think that there's going to be a robust activity. If you look at spaces like spec pharma, we haven't seen a lot of activity there, and there's some activist investors that are going to challenge the current thinking and most likely generate M&A activity. Also, if you look at spaces like medtech, we're accustomed now to seeing 2, maybe 3 mega deals per year. We've had one already. I would think in the second half of the year, we're likely to see another one of the mega deals as well in that space.
Andres, you too. We're seeing retail deals happening.
Absolutely.
Going private, though.
Absolutely. Again, there's so much disruption in the space that people find opportunities. And there are sectors, subsectors that you'll find opportunities in. You have luxury on the one end, you have discount on the other end. You have things around home goods that are feeding off of the entire sort of infrastructure conversation. All these could be real opportunities for people.
Bill, real quick, you're not worried then? Whether the administration does something or nothing, you're not worried?
No, I think when you look at private equity, it's proven itself throughout the last 40 years. And we've gone through a period in the last 3 years where it's been record exits. So they now have to build back up the portfolios. That's how they make money, is buying and selling companies. I don't think we're going to see anything wacky or unusual, but the cycle has kind of come through. They've sold a lot of companies.
Right.
They're going to go buy more.
People want to keep making money. Bill, John, Andres, thank you all so much.
Thank you very much.